and welcome to the June 23rd, 2023 episode of Watching the Tape. There's a German proverb, trees don't grow to the sky, and it's often used by skeptical investors when a company's stock price seems to have become detached from reality. One such stock is Nvidia. Its stock price is up 197% year-to-date through June 21st. It is now a member of the $1 trillion market cap club, along with Apple, Microsoft, Google, and Amazon. Here are the market caps and annual revenues of those five behemoths. The keen observer may notice Nvidia's revenue as being, shall we say, an outlier at only $27 billion. We'll spend more time on that in a bit. I don't personally invest in individual stocks, so I definitely missed out on this winner, but I'm at peace with that. What I'd like to do with this video is try to enter the minds of the investors who continue to buy into the Nvidia story at such a high stock price. Let's start with what Nvidia actually does. It manufactures graphics processing units, or GPUs, used in gaming, artificial intelligence, data centers, and automotive applications. I am not too proud to admit that I lump what Nvidia does into the magic category, along with TVs, smartphones, and 747s. The technology it's truly incredible. And what's really driving Nvidia's stock price higher is that it stands to benefit greatly from the growth in artificial intelligence, or AI-related applications. I will say I find it amusing when a new investing theme dominates the narrative and drives stock prices to unsustainable levels, like we've seen with cryptocurrency, blockchain, and fake meat-related stocks in recent years. There's no denying that Nvidia appears positioned to benefit from the growth and application of AI. And that momentum has certainly been in investors' favor recently. But has it gone too far? I'll provide some perspective and I'll let you be the judge. Allow us for just a moment to look at traditional stock price valuation ratios. I know. Who needs to look at primitive valuation metrics like price to book value ratios when a stock continues to go higher seemingly every day? So we will take a quick look at price to sales ratios and price to book value ratios for a handful of the companies broadly within that semiconductor space with Nvidia. Notice we're not even going to consider PE multiples because they're so high as to not even be meaningful. So here we go. AMD trading at 8.3 times its sales. Intel 2.6 times, Broadcom 10.3 times, Marvell Technologies 8.9 times, and Nvidia at 41.5 times its sales. Think about that for a moment. The valuation of the company is 41.5 times the sales that it generated in the last 12 months. This is not net income. This is top line revenue before any expenses have been subtracted out to pay employees, for research and development, to pay taxes, to pay for raw materials. 41.5 times. Just by itself, without even comparing that figure to its peer group, it's pretty absurd that anyone would pay that much to own a company. But to be fair, investors aren't paying for last year's cash flows. When they buy a company stock, they're paying for future cash flows to be generated by that company. So let's look at price relative to forward sales, or sales that are projected over the next 12 months. So we're going to unveil all of those figures at once, and even with Wall Street analysts' expectation for sales to be 90% higher in the next 12 months than they were in the previous 12 months, the price to sales ratio is still 22 times. That is really high. In fact, it is the highest in the S&P 500 right now. Let's now look at price to book value ratios for these companies. So price to book is the market cap of the company divided by the book value of the equity on its balance sheet. Go through these quickly. 3.5 times, 1.5 times, 16.4 times for Broadcom. That's pretty high. 3.4 times. Nvidia at 44 times. It is an outlier, again, by a mile. It's really not even meaningful. Why should Nvidia's stock price be anchored by such an old-fashioned metric? Investors in technology stocks almost seem to have moved beyond price to book as a relevant gauge anymore. Just think what has to happen in order for Nvidia's stock price valuation to be justified. It seems as if it's almost priced for perfection. If artificial intelligence continues to grow in importance, then competitors will move into the space and try to take market share away from Nvidia, and that won't be good for sales and margins. Of course, I don't make any buy or sell recommendations on this video series. I am simply sharing some perspective on what is happening with one of this year's hottest stocks. That's it for this week. If you found this video helpful or interesting and can think of someone else who might benefit from the content, please share it. Thanks for watching. We'll see you in 2 weeks.